Ever heard of decentralized finance, or DeFi for short? Do you know how it works? Well, let's break it down. Decentralized finance is a groundbreaking concept that is set to challenge and potentially overhaul traditional financial systems. It's all about decentralization, taking power away from centralized entities like banks or governments and giving it back to individuals. Imagine this. You're carrying out financial transactions, but there's no bank or middleman involved. Instead, you're interacting directly with the other party. Sounds revolutionary, doesn't it? That's precisely what DeFi does. It leverages the power of blockchain technology to enable peer-to-peer transactions. This approach creates a global financial system that's accessible to anyone, anywhere, without the need for intermediaries. So, regardless of where you are in the world, you could participate in financial activities, from lending to investing, all through DeFi. Intriguing, isn't it? But how does it all work? Let's dive deeper. So, how does DeFi work? Well, let's dive right into it. DeFi, short for decentralized finance, is like a global marketplace that's open round the clock. It's not just a marketplace for buying and selling, it's a platform for borrowing, lending, investing, and so much more. Now, the most interesting part is, it operates without any central authority or intermediary. Imagine this. You're in New York, and you want to lend some money to someone in Tokyo. Traditionally, you'd have to go through a bank or some other financial institution, right? They would check credit scores, process paperwork, and take a good chunk of time and money in fees. But with DeFi, you can bypass all these steps. You can directly lend to the person in Tokyo thanks to the power of blockchain technology. This peer-to-peer interaction is one of the key features of DeFi. It's like having a global financial system in your pocket. And it's not just about lending and borrowing. DeFi platforms also allow you to participate in advanced financial activities like derivatives trading and yield farming, which were previously only accessible to large financial institutions. But how does DeFi ensure security and trust without intermediaries? This is where smart contracts come in. These are self-executing contracts with the terms of the agreement directly written into code. They automatically execute transactions once certain conditions are met, eliminating the need for a middleman and reducing the risk of human error or fraud. So essentially, DeFi is democratizing finance. It's making it more accessible and inclusive regardless of where you are in the world. You don't need a bank account, you don't need to pass a credit check, and you don't need a minimum balance. All you need is an internet connection and a digital wallet. Sounds like a financial revolution, right? But what does it use to achieve this? Cryptocurrencies. You've heard of them, right? These digital assets have been making waves in the financial world, and are the driving force behind decentralized finance, or DeFi as we've come to know it. To understand how DeFi and cryptocurrencies work together, let's look at Bitcoin, the first and most well-known cryptocurrency. Bitcoin is a peer-to-peer system, meaning transactions occur directly between users without an intermediary, like a bank. This fundamental concept is the backbone of DeFi, which aims to democratize finance by removing these middlemen and allowing direct global financial interactions. Cryptocurrencies like Bitcoin are used in DeFi applications to facilitate these transactions. They're like the fuel that powers the DeFi engine, enabling it to run smoothly and efficiently. So when you're sending money to someone across the globe, you're not sending traditional currency, you're sending Bitcoin or another cryptocurrency. Now you may be wondering, how much cryptocurrency is actually being used in DeFi? Well, we measure this through something called the total value locked, or TVL. The TVL represents the sum of cryptocurrencies locked in DeFi protocols, and is a good indicator of the overall health and adoption rate of DeFi. As of today, the TVL in DeFi is in the billions, showing just how rapidly this sector is growing. But remember, while this growth is impressive, it also brings with it its own set of challenges and risks. Cryptocurrencies are volatile, and their value can fluctuate greatly in a short period, which can impact the stability of DeFi. So that's the role of cryptocurrencies in DeFi. But is it all smooth sailing? Not quite. As we'll see in the next scene, while the potential of DeFi is enormous, it's not without its fair share of hurdles. But that's a story for another scene. For now, let's marvel at the transformative power of cryptocurrencies in the world of decentralized finance. Every revolution faces resistance, and DeFi is no different. As we delve deeper into the world of decentralized finance, it's important to acknowledge the challenges and risks that lie in its path. Just like any other disruptive technology, DeFi is not immune to hurdles and obstacles. One of the major challenges that DeFi faces is regulatory scrutiny. Because DeFi operates on a global scale, crossing multiple jurisdictions, it's often difficult to apply a one-size-fits-all regulatory framework. Different countries have different rules and regulations, and the decentralized nature of DeFi complicates matters further. DeFi applications operate on blockchain technology, which means there's no central authority to answer to or take responsibility, making it a hard nut to crack for regulators. Another significant challenge is security. While blockchain technology is secure by design, the applications built on top of it can have vulnerabilities. In recent years, we've seen numerous DeFi platforms fall victim to hacking and other cybercrimes, leading to significant losses. Let's talk about anonymity. DeFi promotes it, which has both its pros and cons. On the upside, it offers privacy to users, which can be a significant draw in this age of data breaches and surveillance. But on the downside, this same anonymity can be exploited by bad actors for illicit activities, such as money laundering or fraud. It's important to note, however, that while DeFi transactions offer a degree of anonymity, they aren't completely untraceable. Every transaction on the blockchain is recorded and can be tracked. These challenges, while significant, should not overshadow the potential and promise that DeFi holds. The sector is still young, and just like the internet in its early days, it's going through its teething problems. But with time, many of these issues will be addressed and solutions will be found. But despite these challenges, DeFi continues to evolve. So, what does the future hold for DeFi? The promise of DeFi is ambitious and its potential colossal. It aims to transform the financial sector as we know it by offering a decentralized alternative to traditional, centralized financial systems. Decentralized finance is not merely a disruption but a revolution in the making. But revolutions are seldom easy. DeFi is no exception. It continues to face resistance from traditional financial institutions, the stalwarts of finance. After all, why would they readily concede power to a nascent, decentralized system that upends the status quo? This resistance, however, doesn't dampen the spirit of DeFi. In fact, the potential of DeFi is such that it continues to evolve, unperturbed. It's like a river that carves its own path, irrespective of the obstacles in its way. The total value locked in DeFi applications, which represents the sum of cryptocurrencies used in DeFi activities, is constantly on the rise. This suggests that more and more people are beginning to trust and see value in this revolutionary financial system. The beauty of DeFi lies in its global accessibility and the autonomy it offers its users. It's a system that enables peer-to-peer transactions without intermediaries. It's a system that promotes financial interactions without borders. It's a system that promises anonymity, yet ensures traceability. However, the journey of DeFi is just beginning. There are still regulatory challenges to navigate and security risks to mitigate. But if history has taught us anything, it's that innovation often triumphs over adversity. And DeFi, with its revolutionary promise, is a testament to this spirit of innovation. The future of finance could very well be decentralized. Only time will tell. Decentralized finance is indeed a complex concept, but its potential is undeniable. As we've seen, DeFi is a revolutionary approach that harnesses the power of blockchain technology to facilitate peer-to-peer transactions, eliminating the need for intermediaries. It's closely tied to cryptocurrencies, with Bitcoin leading the charge, serving as the lifeblood of many DeFi applications. But like any innovation, it's not without its fair share of challenges. Regulatory hurdles and security risks pose significant obstacles for DeFi's growth, yet the promise it holds is immense. Imagine a world where financial interactions are global, accessible, and transparent. That's the potential of DeFi. Despite the resistance from traditional financial institutions, the future of finance could very well be decentralized. The total value locked in DeFi activities is a testament to its growing influence. So, next time you hear about DeFi, you'll know exactly what it's all about. Thanks for watching, and stay tuned for more exciting insights into the world of finance.